Ladies and gentlemen, the situation in China right now has just gone from bad to worse. Shanghai, China's second largest city, has just gone into another painful lockdown. This is going to have big consequences for China's economy. It's going to add more pressure to the supply chain issues. It's going to weaken consumer demand in that area. And also US companies like Tesla that are operating in China are going to be hit as well. So I don't know about you, but I'm getting a very, very bad feeling that something is not right what's going on with China. The fundamentals aren't looking good, but the data that's coming out is looking great. But people, if you can't trust the data, what you have to do is follow the money. And guess what? The money's either being defaulted on or is fleeing. So everyone, exactly what is happening in China, what effect will it have on its economy, and what effect will it have on the US and Australia markets? That's exactly what we're going to get into in today's video. So let's not waste any time. Let's get straight into it. Okay, first things first, listen to this everyone. China's economy faces new blow from Shanghai Lockdown. The lockdown could cut GDP growth by 0.4%, economists say. So again, people, I've been covering this extensively on the channel, and like I've been saying, it seems like every month there's a downgrade on China's GDP, and we've just got another downgrade yet again. Shanghai's sweeping two-phase lockdown will likely deal a heavy blow to business reliant on consumer spending, though economists say the city's industrial sector can largely withstand the disruption, mitigating threats to global supply chains. So first things first, this is going to affect companies that are reliant on consumer spending. Companies like Tesla and Apple that operate in China. The economists in this article are saying it's not going to have an effect on the supply chain issues, but I beg to differ. Yes, it may not have a huge effect, but it definitely isn't going to help the supply chain issues that we're seeing right now. And I'll bring up a chart here, people. We can see the rise in cases, how China is facing its worst COVID spread since Wuhan, and it shows no sign of easing. So they still are on an uptrend, and we'll have to see these lockdowns continue. And for those wanting to know, as a major financial and trade hub, Shanghai contributes 3.8% to the country's GDP. It's also the second richest city, trailing only Beijing. So Shanghai is definitely important to China's economy. It is the second richest city, only second to Beijing. So high frequency indicators and company statements released so far suggest a likely temporary hit to factory production as the government tries to minimize the fallout. The damage to consumer sentiment may be more lasting though, putting the government's full year growth target of about 5.5% under threat. And that's exactly what we've been talking about on the channel, everyone. I've been saying it doesn't look like China's going to be able to hit this. And remember, China is reliant on being able to grow very, very fast. They've been a very fast growing economy, but it's looking like the boom days of China or the economic miracle is starting to come to an end. You can't just keep building these ghost cities forever. Even before Shanghai Lockdown was announced, Nomura Holdings Inc. warned China's economy faces its worst downward pressure since the pandemic began. The bank's economist wrote in a note that markets should be concerned about a slide in growth in the second quarter as they downgraded quarterly forecasts for the rest of the year. So it's going to be very interesting to see if China continues with this strategy, because it's now been over 2 years now since the first outbreak, and they can't keep doing these lockdowns if they want their economy to keep going strong. Also, factory activity likely took a knock in March, with official manufacturing purchases manager index, which is scheduled for release on Thursday, probably slipping into contraction after the Shenzhen lockdown, according to Bloomberg economists. And we can see the chart here of annual economic growth, and the forecast is looking like it's going to fall below 5%. Now again, with supply chain issues, they're saying, look, maybe it won't be bad. Maybe they can avoid supply chain issues as long as these lockdowns don't last longer than 3 weeks. But if they do last longer than 3 weeks, it's going to be more pain for the supply chains and more inflation. And if the products aren't there on the shelves, consumers can't buy them, and consumer spending is going to fall as well. And this is an example of how it will affect companies in the US. So Tesla Inc. meanwhile suspended production Monday, with operations to be halted for 4 days. And it's looking like they're probably going to extend these production shutdowns. But this is only the first piece of the puzzle on what's going on in China. This is what's happening with their economy, with them going to lockdowns. But of course, we can't really trust their GDP data. So what indicators can we look at to see what's really going on in China? Well, let's follow the money, people. Listen to this. China's bond market exodus shows signs of gathering pace in March. What have we seen over the past 6 months with the developers, everyone? We've been seeing developers drop like flies. We're seeing developers can't make bond payments, and now it is getting worse. The biggest exchange traded fund tracking yuan bonds recorded a whopping 460 million of outflows so far this month, adding to recent signs of an exodus from Chinese assets. And this is one of the biggest drawdowns on record. Listen to this. The outflows put the iShares China CNY bond ETF on track for its second biggest monthly withdrawal on record. Data which analyzes trends in global capital flows say weekly flows data for March suggests the recent retreat from Chinese assets is gathering pace. And could this be investors worried about how there could be sanctions placed on China if they don't condemn Russia, or if they help Russia in any way? Only time will tell. The Russia invasion of Ukraine has essentially brought into play a new downside scenario for the Western holders of Chinese bonds, whereby sanctions and debanking and the reciprocal use of capital controls pose a non-negotiable yet catastrophic risk. And we can see here on the chart how the outflows have accelerated. A narrowing yield premium over treasuries and the risk of US sanctions due to China's ties with Russia have dampened the appeal of yuan debt. The Institute for International Finance said investors pulled money out of the Asian nation on an unprecedented scale since the war in Ukraine began in late February. And hey, I definitely don't blame them with China's property crisis. And remember, the housing market makes up to 29% of China's GDP. Now with their more lockdowns, with the recent crackdown on tech companies and innovation in China, it's looking like China is becoming more and more uninvestable by the month. And what I think this is going to lead to is more and more US companies looking for other alternatives to build their factories and to create their products. Because if China keeps going into lockdown after lockdown, well then simply these US companies aren't going to be able to produce the goods. So what hopefully they'll do is bring manufacturing back to the US, but what that would create is much more inflation because production would be much more expensive. So they may go to alternatives like India or Vietnam, for example. But we need to remember that China is still the global factory for the world. They are still the creator of many goods. So if they slow down, this is going to affect us in the US. It's going to affect in other countries like Europe, Australia, etc. I don't think this will cause a big crash at all unless China has some kind of financial crisis or black swan event that we don't know about yet because they're not being very transparent with the data. But everyone, what do you think? Let me know. So everyone, that was just a quick update with what's going on with China. Now, if you want to get up to 5 free stocks with Moomoo for when you deposit $100, I'll put a link in the description and a pinned comment. Thanks for watching. You are awesome. I'll see you all in the next video.